We're going to be talking about curbing inflation in Nigeria, balancing monetary policy and structural reforms. Remember, yesterday on the program, we spoke about the new numbers released by our statistics organization of Nigeria. That's a National Bureau of Statistics, where that our inflation rate, that's headline inflation, went down to 18.02%, and food inflation to 16.87%. We saw those numbers down. Actually, if you remember our photo from yesterday, which we'll still have showing on the screen now, telling you about that, we see that 6 months downward trend so far. And you know, the aim of the government is to get us to 15% inflation numbers by December. How possible is that? We still have about 2 months to go to see if that's something that we would be able to achieve come December 2025. But you can see there, over there on your screen, the numbers: September 18.02%, 16.87%. The numbers for the food inflation went down by 5.0%, down actually, which of course is termed mostly to harvest season, strong harvest. The numbers have been down for that long. But how do we actually curb inflation in Nigeria? How are we going to do this? Balancing monetary policy. Our guest yesterday had a lot to say about this, and this morning we're talking about it, taking it further to see how can we actually balance monetary policy and structural reforms. While we're waiting for our guest this morning, Mukhtar Mohammed, to join us to further have this conversation, let's just have a brief intro in the conversation. Now, inflation is one of our major issues, one of our biggest economic concerns. Of course, it's eroding purchasing power, raising production cost, and deepening poverty. Now, recent reports from the National Bureau of Statistics indicate that inflationary pressures are easing, but long-term stability will depend on a mix, of course, prudent monetary tightening and deep structural reforms. That's what we're going to see. We asked that question on the program yesterday. What do we expect with these numbers that we've gotten for September, and of course by November we'll get the October numbers? What should we expect the upcoming and the last MPC meeting for the year? What do we expect from them? We'll have that conversation too with our guest this morning, Dr. Mukhtar Mohammed. If you've joined us this morning, good morning.
Morning. Thank you for having me.
I feel like, bringing some gongs and cymbals to say thank you for a very long sabbatical you had with us, but it's good to have you back after a while. Now, first of all, before we go to this conversation...
So sorry, I'm back.
It's good to have you back. Yes, let's look at one of our key top stories before we enter into that curbing inflation and balancing structural reforms. Now, this time around, Nigeria is not on that list for Africa's growing economies. Instead, we're seeing Benin, Ethiopia, Rwanda, Cote d'Ivoire, Uganda. What does that mean? Even with all those projections they gave us this week, they gave us 3.9 growth projection, debt to GDP rate, declining. How come we're not part of that, growing economies?
Well, again, when it comes to the parameters of growth, you look at the rate of growth by inflation and also job creation. If you go through that report very well, you realize that what is key among these countries that the fastest growing economy in Africa is their infrastructural development. They mention it there, and also their monetary policy too, especially in the area of debt servicing. And if you go down to that report, you see why Nigeria is not there, because again, our debt services is very, very high. And we have high cost of debt servicing. Then our structural reform in terms of physical side in the area of financial prudency. We have political appointees in terms of allowances and all that. So that also does not help in our structural reform aspect. So yes, we have review from all of them, but again, the review also doesn't say that we are not going to grow well. But what it's saying is that the other African countries will be growing faster than us because of some of the structure they have put in place.
Okay. All right, now to our second story. Now, this is not from a Brexton Wood organization. It's from our in-house, our own in-country, our Apex Bank. And it's talking about the fact that there's high taxes, bank charges as top business constraints in September, according to their own survey. So what do you make of that?
Well, it's all boiled down to what we call monetary policy and physical side coming together. When you talk about tax, you're talking about the physical side. When you talk about high bank charges, you're talking about the monetary side because they are the regulators of the banks. So we have to look at how we can cope that. Nigerians are paying a lot of levies, outside levies. They're all levies, especially for the informal sector, which is a key driver of the Nigerian economy. That is why people keep complaining that, look, you can see that inflation is getting low, but again, cost of living is high because of these levies that some of these small businesses do have. And so in turn, they pass those levies to the consumer. So there need to be a synergy between the physical side and the monetary side in terms of what they really want to do in terms of coping inflation and also helping smaller businesses grow. So, and these are the challenges when you talk of high tax again, and then you talk about bank charges. That has been a challenge. But I think, again, some banks are giving zero COT. Some of banks are even eliminating the normal some charges so that a lot of people can also draft to some of those banks. So it's by choice. But again, it's not that the bank are going out of the CBN rule. But again, I still think that the CBN can decide to intervene and will make sure that there's a fixed rate where bank can be able to charge customers. You do a transaction, you pay COT, you pay account management fee, and all that. And so the central banks are the one to look at that. That has a monetary side. On the part of the physical side, we must make sure that people are paying taxes. They are not paying double taxation. And there's unfortunately, even the double taxation doesn't come from taxes; it comes from levies. So you cannot begin that people begin to pay so much levies, even more than taxes. Those are the challenges that we are having.
Okay, so hopefully this new tax regime we're expecting to see come January 1st, 2026, will it somehow reduce these constraints that businesses have in Nigeria?
Hopefully, yeah, I'm hopeful that should, but again, I'm not that optimistic about it. But I'm just hopeful that that will happen. But in terms of optimistic, I'm not optimistic that because again, when you look at state governors, you look at local government, they strive on levies because the informal sector you cannot really get them to pay taxes. So the only way you can get the informal sector is also for them to pay levies because it's easier for you to go to meet that market woman in her shop and charge her a levy rather than telling her to come and do our tax returns and then take it to the bank. And this is our tax that is due her. That is the major challenge with Nigeria because we've not been able to come up with a system that we're able to catch the informal sector. And again, in trying to catch the informal sector, you also have to provide the infrastructure for their business to grow. Because the situation whereby the informal sector, when I talk about the informal sector, I'm talking about that market woman, I'm talking about that barbing salon, hairdresser, I'm talking about that Okada rider, I'm talking about the woman that is selling the petty trader on the road. How do you now make them pay taxes? What are you bringing to the table for them? Those people in the informal sector are doing all this for one or two reasons. Some of them are doing it to put food on the table. Some of them are doing it to pay school fees for their children. Some of them are doing it even to also take care of their health. So if you, as the physical side, you are not providing those amenities in terms of good school, good health care center, not good big hospitals. Because if you look at Nigeria's stance now, what we really need more is the rural, not what we call healthcare centers, those centers that can cater for those people in their local government, not the bigger hospitals that will build and you go there, you see a lot of people. They need the healthcare centers to be working. With that, they will not be spending money in private hospitals. All these are what they need. When we say provide infrastructure for the informal sector, we are not just talking road, we are talking schools, we are talking about education. Let their children be able to go to school, good schools, not the schools that today they are, tomorrow they are not there, next tomorrow ASU is like federal government is negotiating with ASU. So this make these people to want to send their children to private universities. And so their discovery incomes is reduced. And then you now tell them to pay tax. They was just like, what are you even giving to us? So that for me is a major challenge. That's why I said I am hopeful, but I'm not optimistic.
Okay, all right. Thank you so much for your insights on those two issues from our top stories. Let's go to our conversation today. Curbing inflation. We're already delving into it with some of your responses already, and how we can balance monetary policy and structural reforms. So now, first of all, beautiful 6 months from our photo we had up earlier. We've seen 6 months of disinflation trend going so far, and for the first time in 3 years, it's below 20% for the first time in 3 years. I think it's a good thing. Hopefully we'll meet the government's projection and anticipation of 15-17% by December, hopefully. But what do you think, and how sustainable is this disinflationary trend that we're on?
And I've said it in the program a couple of times before now that the key driver of Nigerian inflation is FX volatility, exchange rate. Once we have a stable exchange rate, then definitely inflation will come down. And if you look at this trend for the past 6 months, you begin to see that that's exactly what happened. We've seen exchange rate drastically come down from a height of about 1,800, 1,700 to an average of 1,500, both in the official and the parallel market. So that is the key driver that have brought down inflation to where it is. Why is that the key driver? Because what we eat, some of them we have to import, and even when we are not importing, the machineries to make them into finished products are being imported into this country. So those were the challenges that we're dealing with. That's why I keep saying that as long as the CBN keep cutting rate, hiking rate will not be the solution, because when you hike rates, you are trying to drive out liquidity out of the system. And I just talked about the informal sector. The informal sector is a sector that is largely driven by liquidity. So when you reduce liquidity from that space, what we are creating is scarcity. And once there's scarcity in that place, it affects over 70% of the household. So you are getting more Nigeria into the poverty level rather than taking them out of poverty. So that is what can this be sustained? I want to say that what we are enjoying now presently in terms of stability and inflation is largely driven by the monetary policy tools. So monetary policy tools can take inflation to a level. But to really curb inflation, there must be that synergy between the monetary side and the physical side. As it stands now, the physical side, outside the federal government, that everybody's put seems to be so concerned about. Nobody is concerned about what the local government are doing, what the state government are doing with the large fund they are taking from the center. So those are the challenges. There must be a synergy, a situation where monetary policy tools are being put there, and then the physical side are being wasteful in terms of, you see the bogus nature of the political appointee of recently governor had about 100 and something special advisors. All these are not going to help you, because again, that is, you are not even dealing with the physical structure that can grow your economy, that can make it productive. I talked about healthcare, I talked about education, talked about transportation. What has the physical side done to reduce this three areas that I just mentioned, to bring down the cost of production, to bring down the cost, to improve distributable income in a hub? Because Nigerian economy is a consumer-driven economy. So once you don't consume, businesses will suffer. So you have to make sure that you provide amenities to improve the disposable incomes of individuals, so that they'll be able to patronize these businesses, and then in turn expand these businesses, and then you see the growth. Remember again, cost of borrowing, despite the reduced the cut in interest rate, is still high. So a lot of businesses are still struggling to pay. And if you look at the bank sheet, you realize that the non-performing loans of the banks are high, because some of these businesses are not able to pay because they are still struggling.
Okay. All right. So far, when you're speaking, you keep on talking about monetary policy, rate cut. Now, we had the rate cut in September. I would expect another MPC meeting coming up in November. With this new information that we have on ground, what should we expect, one, from them come in November? And do you think that another rate cut is ideal currently?
I think what we should be looking at, we're having a fragile disinflation. This inflation that we're talking about is very fragile. If you look at it year to year, that's where it seems to be that large differential, because last year, by this time, this quarter last year, it's about 37%. And then you are now looking at 18.02%. Now, don't forget that this 18.02% that we are celebrating today was driven largely by rebasing of the economy. Rebasing in itself does not bring down inflation, but it's telling people that there's a new area you can invest in. So those are what they, until we get investors in those areas, we would not be, that's why we are not seeing that the average man will say, I am not feeling the impact of what they are doing. So we must also get that whatever we are enjoying today was as a result of rebasing of the economy. Now, let's come. Do I expect the monetary policy to continue to cut rate? I don't expect, because if you look at them, they're very conservative. Whether the previous management of the CBN and the current management of the, I think because this disinflation that we are seeing is very the month-to-month levy is very, very small. So they might want to watch it. Remember again, don't forget that we are still having the challenges in terms of a stable price for PMS. Today, at the time the other report was released, PMS was almost at 840 in some major cities like Lagos. But today, the average price of PMS in Lagos is 925 naira. So that, again, is a challenge that they will have to deal with. So they might look at all these variables before they make a decision. Do I expect them to cut rate? I don't think so. I think they will be conservative enough to make sure that we have a lot of parameters that largely drive inflation to be very, very stable. Don't forget that 2026 is also an election year where you will see movement of liquidity, cash from point A to point B. They have to put all these things into question into consideration before they make their decisions.
So the possibility that although we've had this disinflation so far, if things are not handled properly, we might see ourselves going back, our numbers going up again for inflation is very, very high.
Look, inflation as it stands with the Nigerian economy is very fragile. It's not fixed. We'll continue to have those challenges. Either now we're enjoying food inflation are coming down, but if you look at the margin of it's coming down, that's what I keep saying. And because there's still insecurity in some of the food basket of this nation, in places like Benue State, places like Maiduguri and Borno State, though the farmers are beginning to go to farm, but it's not like they will want to go. So security must have to improve. Infrastructure have to improve in terms of road network. And then in terms of levies, I keep talking about levies. Some of these goods, when they move from point A to point B to into the state, they pay levies, and some of these levies are illegal levies. How can we cope that so that they don't transfer that to the consumer? Those are the things that we need to deal with. Like as I was talking about, PMS is still high, so that they have to deal with also. So all these are the challenges that they need to deal with before you begin to say, okay, we cannot begin to move towards steady cutting of rate. Every time the MPC will meet, we are optimistic that they will cut rate. But now I think sometimes you will see rates remain, maybe when they look at the economic variable. But again, the good thing is we will not see the kind of hyperinflation or in terms of price instability that we witnessed before. Because now, if you go to the market or you go to anywhere, you realize that the cost of goods are not going hyperly like they were before now, whereby you buy in the morning, by the time you go in the evening, the price have changed. For the past 3 months, some particular household items have remained at a stable price. So that is part of the good things that we are going to enjoy. Don't forget that we are having inflow. But again, our inflow is largely driven by crude oil exports. How much we have a budget benchmark of 2.06 million barrels. We are not even meeting there. We have a budget price of $75 per barrel. We are not even at $70. So there's a shortfall. But what has helped that shortfall is the non-oil sector that has come into augment that. Even if the value is low compared to the oil sector, but at least there's something to augment. So those are part of the things that the CBN will continue to look before we say, oh, anytime they are meeting, we definitely respect a rate cut.
Okay, so I'm going to just go back to that topic that we have there, which is curbing inflation, balancing monetary policy, and structural reforms. How does that work? How do we balance monetary policy and structural reforms to help us actually curb inflation?
There must be a synergy. What I mean by saying there must be a coming together. The monetary policy must be seen to helping the physical side. The physical side must also be seen to complementing the monetary side. Now, if you drive down rates, like what the CBN have done, and then cost of production that is not in the hands of the CBN is still high, then there's no synergy. That is a major challenge. So what am I saying? Why am I saying that? If you are cutting rates and businesses are still having high cost of production due to power, due to high cost of power, due to like levies, like I've mentioned, also infrastructure, the road network is still there. Then again, commodity prices are also high because of some of these structures that just some of these challenges that we've talked. So you will not see the impact of that because there's no synergy. Now, I talked about state government and local government receiving more funds. So what have those funds been put into? Are they being put into schools to improve schools so that the average Nigerian do not have to look for a private school? He cannot send his children to a government school. That will also now increase his disposable income for him. Do we see that? Do the average Nigerian be running to a private clinic or a chemist to get medication, or should be running to an air care center because of the facility that they are there? Those are physical measures that will now increase disposable income. And like I said, Nigerian businesses are consumer driven. When there's no disposable income, people will not be able to buy things, and that will not shrink those businesses and then create more unemployment. So the physical side must do theirs. The monitoring side are doing theirs. The physical side, in terms of complementing theirs, they have to also begin to think of infrastructure. Infrastructure should not just be tied to road network. Infrastructure should also be tied to good schools. Schools should not just be tied to just structure, but having good staffs that are well paid to teach the student. Also, hospitals should not just be a large building that do not have doctors. So all these are not going to be driven by the monetary policy. They are going to be driven by the physical side. So until those variables comes in, then government should also curb wastage, whereby we see political appointees, we see overhead costs, recurrent expenditure is going high by the day. We need to begin to look at that. How can we cope that area? Those are part of what will drive down inflation, improve businesses, create employment, and make us have a very stable microeconomic environment. And once that happens, you attract foreign direct investors, you attract portfolio investors. Now, what are we attracting at the moment? Because of the rate of return due to some of the policy of this administration, we are having more portfolio investors rather than foreign direct investors. We must move to get foreign direct investors that will be here for the long term, will be here to provide jobs, will be here to build our infrastructure. Those are what we need. So that is where I said the synergy must be there.
Okay, so you talked about structural reforms. Can you pinpoint exactly which sector, if these reforms take place, would actually be fastest in having inflationary relief for us in Nigeria?
Food. Agriculture. Agriculture is key. Food on the table for every Nigeria at a lower cost. That is key. Because Nigerians are not asking for too much. They are just asking, can we have food cheaper? For me, that is the key. Food security. You see, if you build infrastructure and there's no food on their table, they will now destroy the infrastructure to provide food for themselves. And you've seen it happen majorly where vendors destroy this and that. Some of them are doing this because they are hungry. So food agriculture is key. Food security is key. That is one area they need, because what we see driving inflation in Nigeria is food. We must be able to provide food for them. They're not even talking about housing. Housing is a different thing altogether. But food is key. How do we improve our agricultural sector? What kind of reform will help farmers? The value chain. Why can't we have farmers have storage in farm settlement areas? Who is going to create those value chains? What is going to happen if a private sector is going to create those value chains? Those are what the government should be looking at. That is one area, structural reform, that will be a game changer.
Okay. Now let's come to one of the things. How can we move away? Because now we're seeing the beautiful thing. Although you say it's fragile, and but I'm sure we're hoping that at some point in time we move away from just disinflation to price stability, which will be better for everybody in the long run. So how can we see that, and how can we make that happen? And what's the possible time frame for this to become a reality here for us?
First, we must continue the reform, especially the reform that is driving investors with funds into our economy to stabilize our exchange rate. You see, the CBN governor said that it's in a 5 years high, which is fantastic. And if you, like I said, if you look at our oil price, oil price versus our benchmark, realize that the difference is much. But how have we been able to grow the foreign reserve? Is because we are attracting foreign portfolio investors. So we need to keep that momentum. And foreign portfolio investors are coming in because they have seen stability in our exchange rate. That is one key we need to do. We need to maintain that momentum by making sure that our exchange rate is very stable. That is what will try, that will bring investor and bring price stability. That's why I said whatever we are enjoying was CBN driven. If you look at the CBN, they started first to make the naira competitive. Now they have made it stable. So these are part of now. It's not left for the physical side to also augment what they have done. So if we do those reforms, like I've said, then we'll begin to enjoy the benefit of a steady economic, especially in terms of price stability. Once, like I said, once exchange rate is stable, we see food, we know how much it will cost. You want to clear your car, you know how much it will cost. It's not that today is 5,000. Even if the difference should be, which will be determined by market forces, because we are now floating the naira, should not be a difference of 200 or 300 or 400 naira. So that for me is what we need to continue to do. Sustain the reform, but in doing that, attract foreign portfolio and foreign direct investors so that you have liquidity to deal with the FX volatility, especially from the retail side of the FX market. Once you do that, I can tell you that we will continue to see the kind of positivity that we have experienced for the past 6 months.
Okay, now social safety nets, all these plans by the government to help people stabilize. Now, these things, do you think that they in any way impact inflation? And if they do, how can we manage them well enough so that the impact is not so much? It helps with the disinflation trajectory that we're currently on.
Yes, like you rightly pointed out, that the government is saying that we're helping household. How are you helping household? You are giving them food. You're giving them money to buy food. So you see, we go back to food security. It is key. That is the way you can, then if you have food security, everybody can afford, you have job, nobody, you don't have to be intervening with such amount of money. That is what we ought to do very, very well. Then again, in terms of helping household, are we helping also in the productive sector to be more productive than where they are? So if you are helping farmers to be more productive so they can go to farm, that's a different thing. But when you are helping people based on your political structure for political gain, for political relevance in the future, that means your contribution is not to the productive side of the economy. So we need to look at where are these relief going to? Are they going to the productive side of the Nigerian economy so that they can be more productive, or they are going to the political side of the Nigerian economy? So those are things. And this sense of how do you know this person is rich? How do you know he's poor? You need to come up with a basic data. I'm not saying that somebody that has less than 5,000 naira in his bank account is poor. Somebody can have 5,000 naira, but it's just a minimum, it's just a challenge that he's going through at that period. The next time he has more than that, so are you going to consider him poor? We must come up with variable. The most poorest people in Nigeria are in the rural area. So is this data coming from the rural area? How can you help? This rural area people are mostly farmers. How can you help them to be more productive? If that is why you are giving the household money to have food to eat so that they can go to farm for productivity, fantastic. But if you are giving them for political gain, then you are just wasting your time.
Okay, so now the dual approach of, let's say, targeted subsidies, because now we've removed subsidy from fuel and we saw all that brought us here. And although in other climes, there's some sort of subsidy that goes on, the government, does subsidies for certain things in other parts of the world. But a dual approach of targeted subsidies and structural reforms, how can that help with getting us to price stability quicker?
I am not a fan of subsidy, especially when the subsidy is not driven by data. If you look at the former subsidy that we're doing, it's not that it was bad to subsidize petroleum product, because Nigeria is a petrol economy. That's how we came to that subsidy. But the corruption in the subsidy scheme was high, so we're not able to correct it. So that for me was the challenge. So now, if you want to intervene in terms of subsidy, which area are you really intervening in? How do you subsidize? Are you subsidizing farmers? I keep saying, because the greatest challenge is food. Are you subsidizing agriculture? Are you subsidizing healthcare? How are you subsidizing those? Are you giving for education? Are you subsidizing by bringing in qualified teachers, paying them very well? I don't have to send my children to a private school. Are you subsidizing by making the infrastructure and education very, very conducive for them to come to learn? In healthcare, are you providing drug for the health centers so that I don't have to go to any chemist to buy? Those are structural subsidy, not the subsidy that you throw money at. So for me, because we don't have enough data, that's why I don't support subsidy. If we have enough data, definitely we must think of subsidizing. And in terms of subsidizing, people think you can only subsidize the poor. Even the rich also need to be subsidized, because they're the one creating the job. If you don't subsidize it, they will in turn pass those consumable also back to the people that you are subsidizing. So your subsidy become of no use. So we need to look at subsidy in terms of structural subsidy, agriculture. How are you subsidizing? There was a time that the former is it the president of African Development Bank, additional, was the Minister of Agriculture. Government was subsidizing fertilizer using technology. So there was no that middleman. That's the type of subsidy that we want. Subsidy that will have impact on the life of every Nigeria, not subsidy that will make others become richer than others. So that is my challenge. Subsidy can come, but what type of subsidy are you doing? Is it a structural subsidy or a political subsidy?
Okay, so thank you for that. Now, our time is far spent, and have two questions. I'm going to start with, we're diversifying in a way, supposedly, if we see the information we got earlier in the year, that out of the 20 trillion made so far in the country, about 3/4 of that money, 15 trillion, came from non-oil revenue. Now, we're going next year into the taxation part of the conversation. Do you believe that diversifying away from oil will help us continue on this disinflation trend and take us to price stability? That's one. And then two, the last question, you can model them, answer them both together rather. How quickly can we get to a single-digit inflation number?
Number one, for the first question that you made mention, or you asked, I think we are there, but we need to move a little bit faster in terms of come with that first question again so that I'll be able to clarify it well.
Going diversifying away from oil, how quickly would that take off?
Okay, yes, yeah. So that if you know what I said in my previous, I said the prices of crude is not even up to the oil benchmark. But because of the non-oil sector contribution to the economy, we have seen that we are not seeing so much impact. Ordinarily, our reserves should be going down. But because this sector is doing well, that is why we are seeing what we are seeing. So how do we improve that? We need to look at the value chain. The value chain is how much of this product can we export out of the country and what quality can we do. That's why we need good storage center close to the farm settlement. Those are things that I was talking about. So we need to do that fast. There was a time Nigeria wanted to export yam to the United States. It got spoiled in this ocean because we didn't have a good storage facility. So those are what the physical side should begin to look at. How soon can we get to the promised land? I ask you, how soon was it? We didn't get here just like that. We got here over the years. So how soon can we get to the promised land? It will take time. It will take tenacity. It will take sacrifice. But tenacity in the sense of, is it only tenacity in the price of the people or tenacity on every part, especially the government official? From what I am seeing now, single-digit inflation is achievable within the next 2 years.
All right, thank you so much, Mukhtar Mohammed, for your insights on our conversation this morning. It's been very good to have you again join us on the program.
Thank you for having me. My pleasure always. Thank you.
And that's the much we have for you this morning on the program. We're talking about the curbing inflation, still staying with the stories from yesterday about the inflation numbers going down. But how can we maintain this to curb it further? How do we balance monetary policy and structural reforms to see that inflation in Nigeria goes down? And that was Mukhtar Mohammed giving us insights on that conversation. That's the much we have for you on the program today. I've been your host, Chiamaka Nwafor. Thank you for staying with us. Same time, same place next week. Bye for now.